Mr. J. Lakshmana Rao, CMD Mold-Tek Packaging, because they're one of the users when it comes to the world of crude, because they are the leading manufacturer when it comes to molded rigid plastic packaging containers. So thank you, Mr. Lakshmana, for joining us on the show. Appreciate your time today. Wanted to begin by asking you just that, with the increase that we are seeing in the commodity prices as well as fuel prices, what is the impact that you're seeing? Are the margins going to further dip from the 19% levels?
No, not at all, because our primary packaging products are always protected from price rises. Same happened last year when prices gone up from 90 rupees per kg to 115. And now today the prices are hovering around 140. But you might have noticed in the last 3 quarters, our EBITDA margins are consistently increasing. That's not because of we are able to increase the prices beyond the raw material, but our product mix is changing more towards high value add products like food and FMCG. So the price rise in raw material has no impact on our margins, and rather they are improving. Last year, if you compare 36.7 rupees per kg, is currently 42 rupees per kg is our EBITDA margin.
When we just talk about the sudden price hike, how has that taken a toll on demand? Does that have an impact on demand in the near term? Anything on those lines?
Actually, it was there in the beginning of the Q1 and Q2 when the sales of our edible oil packs has come down by as high as 40%. But you will be surprised to see, I'm myself surprised, in Q4, the sale of the Q packs, that is for edible oil, has gone up by 50%, 50. That means once adopted by edible oil packs, they cannot go back to regular packs, and there is a demand from the consumer side or the trade side that they have to adopt the superior packaging, which they cannot go back just because of some price rise, which may be temporary. So I was myself surprised to see that edible oil pack sales have gone up by 50% in this quarter compared to the previous year, Jan to March. And that tells you the story that in primary packaging, raw material prices definitely will have some kind of tardiness, but if you have a good product mix and able to give a better product, you can always maintain or even improve your margins.
Fair enough, Mr. Rao, but talk to us about your other segments as well, as far as paints business is concerned and lubricant business is concerned, because edible oil, as you mentioned, had quite a bit of surge this quarter. Do you think this is sustainable?
Yeah, it is, because in fact, from a minus 40% in the first 2 quarters, we are seeing a plus 50% in this 4th quarter. It is a clear indication that in primary packaging, of course, raw material prices will impact everybody. But in primary packaging, wherever we have the products are placed in the marketplace, they have to adapt to the superior technology once they adopt it. That is IML decoration. And we don't see any reduction. In fact, in our thin wall sales, the sales are as high as 38% in the first 3 quarters. And the 4th quarter also, we are seeing similar growth. So thin wall, that is again food and FMCG, where we use complete IML. We are noticing a 40% annual growth over the last year. Coming to the paint, yes, because the paint, their own input costs have shot up. There is a price rise in the month of October and November, or November and December last year. And that has made some dip in the sales in the Q3 that you might have noticed in the results announced in the Q3. But in the Q4, they are back to normal now. If not positive, they're better than Q3, which has impacted them as good as the Q4, which is also impacting them.
Right. So overall, across industries, when we speak, they're saying that utilization levels are going up, things are looking better, demand on festivals are much better than what it used to be. Do you get a sense that, the demand overall is increasing across the space, and that's why packaging needs would also only increase?
The real growth I am seeing for the last few weeks is in the ice cream sector. You might have read the article on Amul achieving last full season's demand in the first few weeks of the season this year. And fortunately, we won the largest tender L1 for Amul, which is 4 to 5 times higher than our volumes last year. So we see ice cream leading a good number growth in the coming months. Actually, in March itself, we are reaching a record production of both our food and FMCG sales. And also even in paint, we are seeing record production in March. So my feel is the food and FMCG sector is coming back quickly, and probably the other consumable sectors like oils and paints will catch up soon. But I notice in March, even Asian Paints and other paint companies are all giving good number of orders and call-ups and chasing for supplies. That's a positive sign starting from March, at least in our client segments.
Okay, on that positive note, Mr. Rao, we let you go. Appreciate your time today. So the good news is, at least for the company, that the demand remains very, very robust and they are seeing fresh orders come by from across categories.